So as you know, Dave, we at the ETF Think Tank created, minted, played around with non-fungible tokens, NFTs, mostly for fun, but also for educational purposes. We wanted to see how it all works. And does it make sense? Does it not make sense? Is this a technology and an innovation we should all understand? And we wanted to keep that conversation going, and so I'm excited you're here today to talk about.
Well, I've got my nerd NFT somewhere here.
Hey, as the financial futurist, there's no better person to talk about the future of finance and NFTs and ETFs and all of that than you. So I'm excited you can make the time.
Yeah, let's get going. Where do you want to start?
Yeah. So I wanted to start first, but just a plug real quick, check out the NFTs if you haven't yet, ETF Think Tank /ETF Nerds, and mint your own NFT. I know Dave has, he got one that looks just like him, luck of the draw. I got one that looks nothing like me, but it was just as fun. And I'm just curious, as ETF people and ETF researchers and ETF enthusiasts that we've been all these years, when you look at ETFs, how do you evaluate ETFs? Do you see them primarily as a technology, as utility, as
NFTs
network?
or ETFs?
NFTs.
Too many acronyms.
Exactly.
At the moment, I would say I see NFTs as a very narrow capability built into initially the Ethereum blockchain that we're still trying to figure out what to do with, right? I think that that's a legitimate answer. It is absolutely an interesting piece of technology. The idea that you can effectively instantiate and sign a digital asset is cool. I think we are very much still in that zone of trying to figure out what to do with them. And that's why I think that's where I think the danger is, because much like ETFs, our other favorite acronym, not all ETFs are created equal, and some of them are completely legit and appropriate and have, will stand the test of time. And some of them might be something you should be a little concerned about, right? I mean, there's a big difference between, triple leveraged oil futures and the S&P 500. And there's a big difference between, some NFT that you've never heard of that your brother told you should buy, and what like some of the folks that I think are legitimately trying to build ecosystems like the Bored Ape Yacht Club guys, Yuga Labs. I think that there's a difference. And the problem is we tend to paint everything with one brush, just like we do with crypto. Is crypto all going down? No, it's not all going down. Is one or two things going to blow up? Of course. I mean, that's the same with stocks, right?
But so, from in the ETF side, we always do the famous look under the hood to evaluate an ETF. In the NFT, what is the comparable call to action here? There is no under the hood on NFT, or is there an under the hood on NFTs?
Yeah, I mean, as NFTs are currently being used right now, they're pretty dumb. And I don't mean dumb in the sense that like they're a dumb idea. I mean, like they're not particularly intelligent objects. They don't do much. They don't have a lot of inherent utility. So the question then becomes, well, at the abstract level, what do we use these attestations of ownership for in the real world? And let's start by asking that question. And that's really what an NFT is. It's effectively a kind of deed, if you will. It's not the house, but it's the thing that proves you own the house and not somebody else. But everybody can walk by and see the house. And that's really what NFTs are. So what do we do with those attestations of ownership that's more interesting? I think that what the best examples I've seen so far are really about community, right? They're about signaling membership in something. And now for the moment, most of those memberships aren't things I'm particularly interested in joining. I don't personally see the need to be, one of the 10,000 people who can access the Moonbirds Discord channel, right? It's not an ecosystem I want to play in. But by the same token, there are a lot of folks I know that do, that is actually an important part of their identity. It's an important part of the businesses they're building, is that sense of membership. So whether those are entirely culturally derived, meaning like, hey, look at my CryptoPunk, I must be cool, I was in early, or I must be rich because I spent a bunch of money on it. You're signaling one of those two things. Like there's some value in that. But then I think it's much more interesting when you start talking about things like services that you only get access to, or products you only get access to by being part of a membership organization that you signal by having this NFT. That I think is cool.
So when you look at the ones that exist today, and it's a space that I think is interesting because I've been actually trying to listen to a lot of spaces on the NFTs and crypto, just even to get the lingo in my head, which is completely foreign to me. There seems to be this conversation about we're in a phase of kind of consolidation. Projects have been slower to come to market and all that. When you look at what exists today, what do you think is the most interesting use of an NFT you've seen? So when you think community, are you thinking, like the CryptoPunks, the Bored Apes, is that where you think it has been the most interesting application?
I think what the Bored Ape Yacht Club has done answers a lot of the critics about NFTs, right? I don't know whether any of these things are ever going to hold legal scrutiny, but at least from a social contract perspective, if I buy the NFT for a Bored Ape, I can go then, and people have done this, go start a restaurant and use the image of my ape that I bought all over the menus and everything else and promote it as being a Bored Ape Yacht Club restaurant. That actually is happening. I think that's really cool, right? You're effectively trying to create a piece of cultural history from the ground up instead of waiting for a big piece of content to drop, a Marvel movie, a Harry Potter movie, and then build a bunch of stuff to signal, hey, I'm a fan. What you've actually done is kind of create a generative fan base who all want to do something cool, and the content's what's coming second. So I think that that's really cool. I don't think that that's a particularly replicable model any more than you can say like, well, everybody should just run movie studios the way Marvel does. It takes a lot of things all coming together at the right part. It takes genius somewhere in the mix for those things to work. So I think there's a bit of a lightning in the bottle, particularly with the Yuga Lab stuff, the Bored Ape Yacht Club, and all the extensions that they've done there. I think the thing I'm least interested in is just what has become almost the default sort of rarity table-based art collections that don't particularly have any secondary utility or purpose behind them. Left-facing rocks versus right-facing rocks and all that jazz. Those to me all just seem like people with too much time on their hands. But at the same time, I think you can learn a lot by playing with those things and moving them around and seeing how they're built. To your earlier question about getting under the hood, the most interesting thing to do for me with an NFT is crack it open and see where everything points to, see how it's put together. That is where I think the cool stuff's going to happen, is what you do with these things in the future.
And to that, you mean like the code specific of actually coding these things, the layers and all that?
Yeah. And there's lots of interesting questions around, I'm sure you and the audience pretty much all know this, but, an NFT is just a piece of code with pointers in it. And the key pointer is generally to a piece of art. That's sort of the way we've done it. But that's kind of accidental. That pointer can be to almost anything. So I think what's most interesting to me is what is it when we're beyond just pointing to a JPEG there? Right. And when you dig into the code, sometimes you see okay, are they using the interplanetary file system so that they've got some backup on it? Are there redundancies here? Are they making use of resale rights? Right. And are they tying it to a particular exchange? I think that stuff's interesting. I think the brewing battle between Solana and Ethereum as which is going to be the default NFT chain, I think that's interesting because it gives you sort of different ways of thinking about how it evolves. I do still think it's just incredibly early days. I think we've invented the Polaroid camera. We have no idea what we're going to do with it yet.
Yeah, I mean, the one thing I've learned already is that gas prices are a reality, and Solana is starting to take the lead there because it's so expensive to do on the Ethereum blockchain, which is kind of fascinating. But so from that perspective, to me, it all goes back to the why. So when we were playing around here with it and we're trying to code, and for all of us was the first time trying to figure it out, we figured out the how, to build it, but really the why. Why are we doing this? And which to me is the real question. I'm really curious to see where it takes us, to your point. From an ETF perspective, from just a basic asset ownership, the way we view asset ownership today, do you think NFTs will change that, from whether it's from a broad portfolio investment perspective or even specifically about ETFs? Where do you see NFTs and ETFs intersecting and really changing the way we invest?
Well, so first of all, I think that the idea that NFTs as an asset class is silly, right? So collectible art is an asset class. And if you are buying, Grimes' latest drop for $2 million or whatever the next hot NFT or drop is going to be, the next thing that Beeple drops, you're buying collectible art. That's what you're buying. So that you should be thinking about it that way. The fact that it came as an NFT may change your opinion about whether or not the investment in collectible art goes up or down, or you're going to hold it forever, you're going to day trade it, whatever. But as an asset manager, as somebody thinking about your portfolio of financial assets, all your NFTs pretty much that I've seen so far should just be considered an art collection, which is great. Like that, you're betting on other people's future desire. That's what art collecting is. I'm not going to say anything negative against that. The technology of NFTs, however, could enable some really interesting financial ecosystem changes by themselves, however, which is what I find much more interesting. So, for example, one of the biggest problems we have on the internet right now is identity, right? Being able to prove that you are who you say you are with the appropriate context. Obviously, a very big difference when I am proving to my doctor's website that I am who I say I am to download my test results is quite different than logging into my financial, my Schwab account. And that's also very different than logging into my Reddit account where I don't care. Somebody like whatever. I mean, I don't really want people posting on Reddit as me, but like you could just turn it all off and it's not going to cause me any hiccup. So just navigating that today is a nightmare, right? We've got some single sign-on through things like Google logins, but it's, we all do this, right? How many times a day do you have to find a password or do your second authentication to your phone, right? It's a disaster. And even worse, identity is currently always held externally, meaning that if you go to Amazon, Amazon knows what it needs to know about you to let you interact with their system. Google has a whole nother ecosystem that they know what they need to know about you. I, as the individual, don't control any of that, right? Once I've told Amazon that I live in the Berkshires, Massachusetts, they just now know that, and that gets assigned to my identity, however they track it through whatever ecosystem they're running. The prospect of taking something like an NFT, a token that is non-fungible, therefore I am the only one that owns this and can move it and can present it. Imagine if that was effectively all of your wallet and identification itself, right? That you could have your KYC to be able to be an accredited investor or to log into your crypto account or whatever, to prove that you're an American citizen, to prove that you're not an American citizen. All of those things are incredibly difficult right now. NFTs are one way we might solve some of those problems. The other way some people are talking about it is simply with wallets, right? With wallet itself becoming the store of identity, and perhaps individual tokens allow you to assert that I'm a member of the Audubon Society when I want to display that to say, get in the gate at the Audubon. Both of those I think are really interesting ideas. They have much more long-term impact in terms of how we interact with the digital environment. And yes, we're learning a lot about that with the development of NFTs. I think you have to kind of separate the two, though. There's a big difference between the NFT speculative market of the now and NFTs, the technology of the future.
Do you think there is a future, like when we talk about ETFs, as being different pieces to one wrapper, right? Several securities in a wrapper. And then we talked about direct indexing as another phase of that and the customization that it allows. And is somehow the NFT technology perhaps another step into that, where we're going to get some kind of, coded layers of investment securities, and it's just all one big digital pie.
I think it's happening much faster than people are going to be really ready for, right? So the non-fungible part, let's put aside for the moment. The tokenization of securities in general, I think, is absolutely the future of finance, period. Removing the issues around settlement, removing, trusted third parties wherever we can. These things actually allow for much more efficient markets, much more efficient price discovery. So we're already there in a certain sense. There's something called the SET protocol in the crypto space, largely used by like Index Co-op would be the people who I think most people know are using it. They effectively run hands-off indexes using the SET protocol, where if you want to go buy a bunch of 10 coins that are all metaverse related, they're basketed up and you buy a single security just like an ETF, and it then goes and does the creation if there's an imbalance, right? It's sort of like a self-fulfilling authorized participant process. So it's very easy to imagine a world where, hey, if you could trade Tesla as a token as opposed to Tesla as a stock certificate, you could just roll up any securities you wanted inside the SET protocol, and everybody could launch an NFT, an ETF tomorrow. The NFT part of it doesn't really need to involve any of, they don't need to interact with that. Again, until you get to this idea of presenting yourself as the entity buying a thing, right? The one who's really on the hook for something. Then having control of an NFT, to me, is a really interesting way of presenting that.
I can't even imagine. You guys actually did it a few years ago, put together that whole ecosystem chart of every moving part of the ETF ecosystem. Now imagine that redesigned without all of the middle people.
It's with crypto in it. Yeah, it's just, I mean, just trying to do it for, I've seen people try to do it for the crypto ecosystem, and it's, you get down to the, down the stack, and it gets complicated, instantaneously. So yeah, I think that, that's another lesson here, which is that these things can become infinitely complex, right? And also, much like we end up with cascading issue, and this is slightly off field of NFTs, but we know this with ETFs, where if a BlackRock ETF is also owning the BlackRock sort of bond ETF for a slice of what it owns, well, now we've double counted it, because we say that we have 100 AUM here and 100 AUM there, but one owns the other, but we counted in both places. This is rampant in the financial services industry, this sort of double counting, this ballooning of assets, if you will. It's absolutely endemic to how crypto works, right? I mean, you get a Bitcoin, you stake that to get something else, to stake that to get something else, to put this through that swap protocol to generate the yield over there. And, it's not a house of cards in the sense that everything's directly linked, but people wonder why some of these things unwind so fast. And that's why, right? There's leverage, and there's this sort of double counting problem that happens. One of the cool things about NFTs, frankly, is that it's very difficult to create an ecosystem where that happens, because the NFT only ever exists by itself. That's the whole point. It is just the non-fungible token. If you can't, I know people are working on products that do this, but from a structural standpoint, I can't really loan you my NFT, right? If you have access to the NFT key, you own the NFT right now. We may have a contract where you're promising to give it back, right? But from a use case perspective, the NFT can only ever have one owner at a time. The owner, obviously you could have them pooled, right? A pool could buy a bunch of NFTs, but it's difficult to make that work unless all you're doing is trying to treat it like an asset class. And there've been projects to do that. Like there's quite a few pools of NFTs now.
So, you are interacting with a lot of advisors every day. We are too, and this is so quickly evolving. I mean, even with the intention of keeping up with it, I'm always like 3 years behind. But so for a financial advisor today, what do you think, do they have to be fluent in NFTs? And if they do, is it just to be able to have these conversations with clients who may be more into it than they are? Or is there really a need for, like tied to your business model? You want to survive as an advisor today, you got to know this space, and you got to understand the implications.
I think you could be a very successful financial advisor for the next 40 years and never dabble in any of this stuff, right? The core job of a financial advisor isn't to find the hottest new thing every 5 minutes, right? It's to solve the long-term financial problems of their clients. I think for the foreseeable future, those are still going to revolve around things like earning money, spending money, and investing money, all in specie, because that's just the real world we live in. We pay taxes that way, we get paid that way, we live in houses that we pay for that way. So no, I don't think it's a business risk to not be at the front end of the NFT wagon. I think it's much more likely that you're going to have, younger clients, probably sort of millennials and under, for whom this is important. And I would think about that the exact same way you would think about it if a client walked in your door and said, you know what, I'm really damn into wine. Like when I say I'm into wine, I have a $500,000 portfolio of French Burgundy futures, and I'm planning on taking delivery on the top 10% of them and selling all the other ones before harvest, right? People do that. Like that, I've met those folks, and there are financial advisors who specialize in onophiles, and there are financial advisors who specialize in fine art collections, right? if that's a thing you're into and you really want to get into the NFT space, by all means, but I would treat it with that same level of speciality that you would treat an advisor who is focused on, farmland. Like those people exist, all very valid. But I don't think every advisor needs to understand this. I think you need to be fluent in what's going on in crypto, so that you can have intelligent conversations with your clients. But I don't think you need to be wading in with both feet.
Yeah, at least so you avoid the eye roll. I mean, I have 2 teenagers, so anytime I don't know what they're talking about, the eye roll comes out. So you want to avoid the eye roll, right?
Exactly.
So
exactly.
before I let you go, one last question. As a financial futurist, let's talk future. If you look back based on history, 30 years of ETFs in this country and just how the industry has evolved, the milestones we've hit, at what points, do any of the lessons we've learned in 30 years of ETFs help us anticipate or, expect what comes next in terms of ETFs intersecting with this whole crypto digital NFT world, or even the evolution of NFTs themselves? Like, what are some of the things you're excited to look out for or that you think come next?
Anything that creates bridges, right? When like all of this stuff, all of like the new innovations, whether they're entirely in old finance or a new finance, whenever we create bridges between something really cool and new and the really old way of doing things, that's when interesting stuff happens, right? I mean, now we look back on it and we think it's boring, but like at the beginning of my career, the bridge that was built was the defined contribution plan, right? Getting people to actually invest in 401ks, George Bush's ownership society, like the idea of taking the average middle-class American and making them heavily staked into the US economy was a radical idea at the time. And it was really about building that bridge between the retail investor and the institutional way of running money. I think everything interesting that's going to happen in the next 5 years in crypto is really going to be about where we create those bridges. So for example, just today, I think, or yesterday, FTX sort of was proposing, launching a physically traded Bitcoin exchange here in the US, I think in New York State, I'm not sure, with the idea that like, hey, let's do a fully 100% regulated under the SEC, under the Exchange Act, crypto exchange, just to buy and sell Bitcoin so that we can start building those bridges. I understand why a lot of crypto maximalists are not a big fan of those kinds of ideas, but those kinds of bridge building activities are what allow us to really play with these innovations and get the maximum amount of value in them, while at the same time, not just throwing away some things that we've learned along the way, like how to some extent protect people from their own bad behavior, and also just how to protect people from crooks, right? I mean, people toss around words like Ponzi scheme and this, that, or the other thing. I think mostly we've had some really bad product design in crypto, more than bad actors, but there's also been plenty of bad actors too. And so finding a way where we can safely play with these tools and learn from them in real time, that's the fun part. And you got to do that with bridges.
No, that's awesome. Dave, thank you so much. Always a pleasure to catch up. Dave Nadig, financial futurist at VettaFi, the newly rebranded business. Feel free to throw the plug if you want on what you guys are up to.
Well, I mean, VettaFi, the way I describe what we're doing is we're helping asset managers understand investors, and we're helping investors understand what the heck asset managers are up to. And if we're good at that, investors have better outcomes, and asset managers are happy too, because they won't make products people don't want, and they'll be more successful at getting the products that are good in front of people who really need them.
Yeah. Well, congrats on the move. Very cool. Thanks again.
Thanks, Cinthia.